Music Production.
Yo, what is poppin', squad? So, I'm gonna go over real quick basics on this Amazon chart because there was an Amazon stock split. Now, does that change anything? Like, from like a fundamental perspective, it actually changes nothing. But from a psychological perspective, it actually does change, in my opinion, right? Like, the way I think of it is there was plenty of people on the sidelines wanting to, participate. I want to get Amazon stock, but when it's $2,000 to $3,000 a share, it's kind of like, whoa, like this is kind of ridiculous, like for one share. And a lot of the times, and I know, right, it doesn't really matter in terms of gains, right? If you're making 30%, whether it's $3,000 or $100, it's 30%. That's how I think of it. So, I mean, I think it was definitely worth it getting shares at 2,500. But now that we had the stock split, a 20-to-1 stock split, it does make things so much more interesting. So I think it's a nice little reset. And now we're going to get into the technicals, like this chart. I think there's a lot of opportunity in the long term, right? Amazon they're freaking huge, right? They're a streaming service. They're pretty much a delivery service. They're an online marketplace. You could open up your own store on Amazon. So technically I don't want to say they're like Shopify, but you could do things like Shopify does. Shopify's its own beast, right? But it's just so dominant in the stock marketplace, right? You can't go wrong. I mean, long term, it's hard to go wrong on this name unless a bunch of things fall out and I guess the world really starts to change, right? And there's a bunch of different, I don't even know what could cause it to change, but the way I think of it is Amazon, you can't go wrong long term on this name. Massive uptrend, right? This is the log chart. So we're looking at an exponential trending chart. And since pretty much early 2000s, we've been in a massive uptrend. Now, I just wanted to point this out, right? This is the dot-com bubble that got a burst and it went down 94%. Now, if from the highs, if Amazon wants to go down 94% again, it'll bring us down to $13. So if something goes on in the markets, right, throughout the rest of this year and maybe going into 2023 where there's going to be a market crash, those are the levels I'm kind of looking at. Do I think we'll go as far as down as $13? Probably not. But that's just a level that we'll keep an eye out for. So let's mark that out. It's right around here. We'll say it's 1444. That's essentially 90% plus from the highs. Now, we'll start off, right? We'll put this back into regular chart and we'll look at basically basic support and resistance levels, right? So we have our all-time highs, right? All-time highs right up here, and we struggled in this zone. So actually, we'll mark out this zone. We'll say that this zone right about here is our all-time highs, like supply zone. We'll mark that out. Who knows how far it's going to go, but this is our zone. We need to break eventually at some point, right? Now, if you're long term on Amazon, right, and you're thinking, oh, I want to gather as many shares of this as possible now that it's had the massive 20-to-1 split, right? Well, what you could do is, in my opinion, you could start to pick a level, right? You want to pick, where do I want to gather shares under so that I can gather as many under a specific level? And then once it gets above that level, I don't really add more to it, right? It depends how you want to play it, but that's how I think. It's probably one of the better ways to dollar cost average. I'll mark out a few more resistance zones or support zones. That was kind of a support, right? And now we're going to look to see if that acts as resistance in the future. But then we also have this level here, which we've come back down to, right? So right now, I think it's important that we pay attention to this $100 zone and this $144 zone. We might play in this range for a little bit before we potentially make a leg lower, right? And worst comes to worst, I think, in my opinion, is we come back down to like 69. I think that'll be a mint spot to buy. But that's what I'm leaning towards, right? Just in case there's any economic crisis. We end up going into some sort of recession that's drastic, and there's many jobs lost, and people can't afford shit, and people start losing their houses, a bunch of stuff like that. It's going to cause a market crash, right? If that happens, where are the levels we're going to look at? Well, we're going to definitely look at $69, the lowest. So this is how I'm thinking back to the dollar cost averaging if you're long term on this stock, right? Which I am. So the stock split, and I think it split on the Monday. On Monday, I gathered 15 shares of Amzn, and now my plan is for the next 2 years, and if as long as we stay under this $185 zone, I want to gather as many shares of Amzn as possible. So this is something I don't plan on selling it. Like, this is something I'll maybe sell like when I'm in my like late 30s. Like, it's something I want to hold for a long time and really let it develop and make a large position for myself. So how am I going to do this, right? What is the smartest way? Well, you could dollar cost average at the highs and the lows. You could dollar cost average on a weekly basis, bi-weekly basis. It doesn't really matter. What I'm most concerned about is getting shares under this $185 level. I don't care where. Of course, the lower we go, closer to this $69 level, the more shares I want to add, right? I want to get more and more the lower we go. So I don't know what my exact plan is in terms of weeks, because the way I budget my money, it goes into like emergency accounts, it goes into like condo savings, and it goes into other things, right? So I'll have to figure out a way where I can consistently pick up at least a share here and there, 2 shares here and there. But this is basically how I'm looking at it, right? Say we have a huge, like a dot-com bubble, terrible crash. Well, it's going to go down probably to like somewhere around $14 to $25. That's like 85 to 95%, right? If it gets down there, you want to be scooping up shares big time. Like, it's Amzn, right? Like, Amzon's not going to go away. Like, it's so popular. Like, even when I think back, like just over the past 2 years since, excuse me, 2 years since COVID, right? Like, the amount of times I've used Amzn is actually shocking, right? Just quickly, oh, I need this. It's actually way cheaper on Amzn. Yep, scoop it up. Like, it's insane how many times I've used Amzn. And I'm sure there's other people out there who use it plenty more than I do, which is why it's so accessible, right? And another thing that's kind of important is, like, say there's another pandemic, right? You can't go out. What are you going to do? Well, Amzn. Like, it's almost like pandemic proof. It's almost like black swan proof. It's such a staple in our society nowadays. Like, Amzn is huge. This is why I think this might be a new stock to really have fun with over the next few years, to just dollar cost average, get as much capital in as you can, because I'm sure there's a lot of people thinking the same things, right? So that's kind of like my little breakdown here. These are the levels I'm watching: 69 and 100. If we get anywhere below 100 into that $69 range, I want to start adding more and more and more. But for the meanwhile, if we play in between 100 and 145, right? Because what I'm expecting is we might come back up here and potentially use this as a resistance now, right? Because it was support, 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 support. We break below, it might flip now and become resistance. So we'll see how long that does, if it does happen. And that's what we'll be watching again. Weekly time frame, massive uptrend since essentially 2001. You can't go wrong. So that's my breakdown on Amzn here. Peace.